Welcome to the full FX Disruptor video series with LMAX Group. Over the course of 3 videos, David Mercer and I, CEO of LMAX Group, are going to do something weird. I would like to say we're unaccustomed to doing, but we're going to be disagreeing about things, we'll be arguing about things, and we will be agreeing about things as well. But the common theme is going to be, where is disruption happening in our world? And this is going to go across crypto and FX. So David, great of you to join me. Really looking forward to this series as we progress through it. Let's get into, I guess, the crypto world first of all, which I think is the hot topic here. I mean, LMAX Digital, you're seeing continued new peaks in volume. I'll get your sales pitch in for you early. Which is, evidence to me that the crypto world is maturing, and there seems to be more of a structure forming. What do you think of the interesting structural developments out there at the moment in crypto land?
Yeah, good to be here, Colin. Look, it's a thrilling environment, but it's still very nascent. So we're a long way from perfection. I mean, a lot of us old pros, if you like, are sort of scratching our head because you haven't got the plumbing in crypto that exists in traditional capital markets. We take for granted aggregation, for example, in foreign exchange. We take for granted that you have clearing houses. You take for granted you have prime brokers. You take for granted that anybody can trade foreign exchange effectively. And likewise, if you look at the futures market, if you want to buy a gold future, it's entirely possible. Crypto's not there. So I rather tritely call it the ABC of crypto: adoption, banking, and credit. Adoption is happening. I think LMAX Digital is a barometer of that. Put simply, Colin, LMAX Digital wouldn't exist if there was no institutional interest. There's enough platforms out there covering retail customers. One you may well have heard of, has 56 million customers listed recently. We have 500 institutional customers. So retail doesn't need LMAX Digital. Retail needs an institutional marketplace because we know that's what feeds everyone out there. So within the institutions, there's a lot of banks out there and proprietary trading firms that are scratching their head because they don't have a clearer, they don't have a prime broker. So what's interesting on the B and C is banking and credit. For a long time, over the last decade, if you said you were a crypto operation or a crypto hedge fund, your bank, be it Barclays, HSBC, JP Morgan, other banks are available, they may not open a bank account for you. Just say, no, we don't touch crypto. So that was a problem. How do you get fiat into the crypto systems? That was problem one. So we need better banks just to bank the operation. There's 2 crypto-only banks, if you like, that have come to the fore, but they don't have the balance sheet of the names I mentioned. So that's a problem when you're talking asset managers and pension funds and, the real money accessing the market. So at the moment, if you're a corporate treasurer, you actually have to open an account with a digital operation. What they really want to do is just use their existing channels. So we need that banking. And then the last bit is credit intermediation. A lot of us, again, we take it for granted. We ignore credit a lot in FX because it's taken care of.
Yeah.
I'm primed on by a bank, and I may or may not trade on LMAX Exchange or LMAX Digital, or I might trade on one of those other exchanges you may have heard of in Chicago or London, but the access point is via a bank, again, through credit intermediation. So that's going to open the floodgates. It's not there today, but when you see the press articles about A bank or B bank entering the market, that will open the channels for real money to come in. Then crypto will become a real asset class.
Am I right though in thinking, because like yourself, I look at these announcements from the banks, but it strikes me that what they're doing actually, and this may be speaking to your point there, they're looking to be facilitators rather than what I would call a traditional market participant in the market maker, market taker sense. Is that fair?
I think that's fair. I think that's very fair today. It's almost they have to do it now. But by the way, they didn't have to do it 3 years ago. I mean, there's a lot of, if you read the crypto evangelists out there, it's like, oh, large bank A has to be in it. Well, they don't actually, because today the total market cap of crypto is about $1 trillion.
Yeah.
The market cap of gold is 10 trillion. As you and I well know, foreign exchange trades 7 trillion a day. So whilst there's a lot of noise about it, it wasn't that much of, it wasn't that demanding. There wasn't that client demand. They didn't have to be in it. But now I think they do, because some of their own customers are now taking money out of their bank accounts and opening with a crypto exchange because they want to be long Bitcoin or Ethereum. So I think they need to, it's just that they need to facilitate it. The head of one large bank recently said, yes, we need to be fearful of these fintechs because we need to hold on to our customers. And those customers traditionally do everything with that bank. They buy equities, they put money on deposit, they might do mortgages, they have some wealth management there. They might, pick a few stocks and buy it through the bank. And now they're saying, hey, can you buy me some Bitcoin? So it is the facilitation. I don't think in the next year or two, you're going to see huge crypto market making divisions or proprietary trading desks in banks, but it will be somewhere. And then we'll watch it develop. When it becomes a very liquid product, when it goes 10x. So if you're talking a market cap of 10 trillion, so the size of gold, then I think you're going to truly say, yes, this is an asset class. And George over there is head of the crypto division. Today, it's still a small part, and it is just about facilitating the growing client demand.
I mean, I read something today somewhere that said, like, I think to show off my crypto credentials, I call it dodgy coin, but Dogecoin has dropped $72 billion in market cap over the last month or so, which is $12 billion more than Lehman. It's like, these numbers are quite big, it's so, if the institutions are tiptoeing into this world, I look at it and think to myself, I think there's a problem with the market structure when a tweet from a notoriously loose individual is moving the market. Have we got to solve that problem as well before these people come in?
Yeah, I think some people, some people need to be more responsible, especially when you've got a listed vehicle. But maybe that's also a sign of the lack of liquidity or lack of depth in the market, in that a tweet, a comment can move an asset class this much.
I mean,
it's a bit like, if you were the CEO of that company and you said, oh, my cars are rubbish, then of course you're going to expect it to move 20 or 30%, maybe 50%. Yeah. But unfortunately, one individual is moving an asset class, and that's just because it is still predominantly a retail market, Colin. I mean, you and I know the foreign exchange world. Everyone talks about retail and FX, but retail FX is 15 to 20% of the market, 80% institutional, because people actually need foreign currency to do international trade.
Yeah.
Crypto, I would say today, is probably 90% retail. So yes, you're seeing massive pumps and massive sell-offs because of a tweet and because it's retail led. As the institutions come in, and you're seeing that, I think you saw that in the latest sell-off, it finds a floor. Yeah. That resilience is institutional money saying, I like it here. I am bid at 30. I'm not bid at 60,000, but I am bid at 30,000. That's the institutional money coming in. Yeah. But everything else in between is very retail led today.
Yeah. I mean, it's interesting, isn't it? Because in many ways you look at it and say, is crypto vulnerable to the same sort of thing as we saw with the GameStop, the meme stocks? But then the retail army that's actually targeting short sellers are going like, well, the last thing we really need is crypto going down. So they kind of will. But there is that vulnerability, isn't there? I guess that with so many retail traders, the price action is dictated to a degree by them.
Yeah, that's absolutely right. And one of the structural issues we need to discuss and address is there's too much leverage in crypto. Like, if you're a sensible trader, you're going to use very little leverage. I mean, I've got some of the biggest proprietary trading firms in the world trading in LMAX Digital. I'll tell you that intraday they might use 5-to-1 leverage intraday.
Yeah.
Overnight, it's unlikely they're using any. They might use 2-to-1. In retail land out there, so you hear about perpetual swaps, you hear about the futures, sort of retail futures market. People are using 100-to-1, which is just crazy. I mean, it's hardly, if someone sells, I don't know, in the marketplace, 5 million of Bitcoin, I'm sorry, you're going to be stopped out. So yeah, it's crazy. So there's this gold rush to get access, but with people who actually don't have that much capital, and they're using 100-to-1, 50-to-1, and then what you have is these death spirals. So when there is a gap or a good reason, for example, China outlawing mining, someone investigating one of the large retail operators, there's naturally a sell-off, but it's perpetuated because of the leverage. All those stops get triggered. So typical markets, things get oversold, but you're seeing gaps of, 20%, 30% because of that, the retail predominance. But in a way, it's a good thing for the market. When it gets flushed out and they realize there's no such thing as a free lunch, then we arrive at a much more orderly market of which we're familiar with.
Yeah, I mean, because I was about to say there, you'll be pleased here. I've got a theory about this, because my theories are always infallible until they're not. But it strikes me that if we did see a continued decline in crypto and we saw a blowout to the downside, that could actually be quite healthy for the industry, in my view, because it would weed out those weaker players. It would instill a sense of responsibility into those that remain in crypto, and probably would increase demands for the sort of structure that you were talking about earlier on.
Yeah. Now, unfortunately, Colin, I have to agree with you, right? So on that, the blowouts. So look, people have short memories. So we're sitting in 2021. Bitcoin's somewhere around 30,000. That's not a bad performance, by the way. Closed the year at 29,000. So forget the 60,000 that was paid a month or two ago.
Unless you're long.
The short memory is it was 3,800 in March 2020 at the start of the pandemic.
Yeah.
And if you looked at the graph, it looked like it was going to zero. It didn't. It found a floor. That for me was a real sign that the market was here to stay, because it showed resilience in a once in a decade crisis. I know it's a once in a century pandemic, but every decade we can chart them. There's a crisis or other that really affects capital markets.
Yeah.
So I thought the resilience demonstrated in March 20 was phenomenal, was good for the market. I think this new level in 2021, the 30,000, again shows resilience. And some of the fluff, some of the retail speculation will be eked out of the market. And I'm sorry that some individuals will have lost money doing that. But overall, we're now going to have a better marketplace for all. And people understand that, it's the Warren Buffett saying, don't buy something for 10 minutes unless you wish to own it for 10 years.
Yeah.
So I happen to be a big believer in crypto. I happen to be a big believer that the technology can revolutionize certainly the back end of capital markets, but it's not going to happen in 21 or 22. It's going to take another decade of growth.
Yeah.
Right. It took us in the FX market, Bankerstat happened in 1978. It took 24 years for there to be a central clearing system to solve that. I think crypto will be a bit quicker than that. But certainly it's evolving, and it's the more institutional players that come in, the better market it will be for everyone, all segments of the market, retail and institutional, and the bigger banking names entering the space can only be good. I hope, of course, we want to be successful in the space, but I hope LMAX Digital can be part of the ecosystem and help develop a more orderly market for all.
Yeah. Okay. Is one of the things then to get these institutions involved? Do we need to sort of develop a funding market behind it? I.e., I bought Bitcoin at 50,000. Oh dear, I'm having a very bad year, but it's okay because I've got carry.
Yeah.
At the moment, we don't.
Correct. I think so. It exists in crypto. So the crypto evangelists out there, I'll say, David, you can do it. You go into DeFi and you can stake it, and there's contango in the market. I can sell the future up high and I can buy it spot. Yeah, that exists. It does exist. There is carry, but with the carry comes a lot of credit risk. So be aware of the credit. There's no such thing as a free lunch. It's also very credit intensive. So you can trade a future with a well-known name, but you're not getting much leverage on it. And you can buy the spot with LMAX Digital, but there's no leverage. It's 1-to-1. So it's really quite expensive. And you can get a yield of 6 to 8. There isn't yet, Colin, a stock borrowing and lending market, a repo market, of which we're familiar. It's coming. And again, it will be provided by the bigger names, right? It's people that are holding it on the balance sheet and just want to earn something from it. Yeah. At the moment, unfortunately, most of us would buy a Bitcoin and put it in the vault and earn nothing for it and hope that we get some capital appreciation. Certainly, again, that will unlock the wheels. That will bring more institutional money, right? That will, someone saying, hey, I'm a long only fund. I've got $1 billion of Bitcoin, it's earning nothing. I'll lend it out to you. You're a good AAA name, and you're going to pay me 6 or 8% on that, which is a good yield today. So, yes, that needs to develop, and it's I guess coming to a bank near you soon.
Mm. Okay, so one other thing I just wanted to get into before we close out. My sense is that the world's central banks are getting more aggressive in their messaging. They've been very proactive around promoting central bank digital currencies. And with that is coming some inferred criticism of the crypto world.
Yep.
Is this a threat to the crypto landscape? And I guess actually I'm interested from your point of view as LMAX Group.
Yeah.
Is it an opportunity for a provider like yourself?
Absolutely. So the two different things, right? So again, I think central bank digital currencies are a good thing for the market, right? To just digitize everything we use.
Yeah.
Probably in a decade from now, 2 decades, you won't know what a pound note looks like. Actually, pound notes haven't existed for 20 years, but anyway, you won't know what a £5 note looks like because everything's digital. You and I probably think, because we can tap and go on our phone, we think it's digital already. But in fact, the real clearing is taking 2 days. So I think it's a good step for the central banks. Not quite sure of the use case yet. I mean, the example they used in the United States was getting welfare checks out, or the pandemic checks, right? Imagine the furlough scheme we had, getting money into the population's hand more quickly and more efficiently. Yeah. With that, there's some privacy concerns. I mean, that's really what you'd be concerned with. Why should we be concerned? But at the moment, if you run around with $100 in your pocket, no one's telling you how to spend it, or no one knows where you've spent it. If you want to spend it on a racetrack or in a casino, you're at liberty to do that. I guess the privacy concern is that Big Brother's watching you. So that's the downside of it. But I think it's inevitable. Again, it will ease the wheels of the crypto asset class. So LMAX Group today, I'd say, would be a very good on-ramp into crypto. So what does that mean? I've got 160 bank accounts. I've got nostros in 20 different currencies. So if you want to send me krona or peso or pounds or dollars or yen, you can do. I'll do the FX for you if you want dollars. Why do you want dollars? Well, because I want to buy Bitcoin, and the best market is Bitcoin dollar. It's not Bitcoin peso.
Yeah.
So I've got the fiat on ramp for you, so that's helpful. And then I've got the digital operation so I can give you access to the crypto market. So for me, I see it as an access point. And then the hard bit is actually getting access to say something in DeFi. Unfortunately, you can't send dollars into DeFi right now. Back to my B problem, not enough banks doing it. So again, you'd come to LMAX Digital and say, David, can you buy me some Ether? Because the whole DeFi world is mostly powered by Ethereum today. So then you have your Ethereum and you can exist in the decentralized finance world. So I see it as an opportunity. I think at the moment, the central bank digital currencies can become the stable coins, of which there are many, but you don't know the backers. You might be happier with a stable coin that is the Fed or the Bank of England. You may not. By the way, if you're a crypto evangelist out there, don't shoot me. I know you believe we can get rid of all those authorities and we should just trust each other's central countries. But I think it's an additional lever. I happen to think DeFi can transition capital markets. And if nothing else, Colin, capital markets moving 7 days a week is an inevitability of the next decade. It's happening in crypto today. I think that's a better service, a better utility for everyone. And certainly as a simple exchange operator, I like the fact that my infrastructure can be in operation on a Saturday and Sunday. It's not sitting there getting dusty and costing me money on Saturday and Sunday. So I think that's a good thing. DeFi itself is just at the very, very start. We have to accept there's going to be some errors along the way. It's growing. And I happen to think a bit like the central bank digital currency thing, a lot of the ideas, a lot of the experiments in DeFi and in crypto will feed back in the traditional capital markets. And then both existing capital markets and new capital markets will benefit from those experiments and those innovations.
We have agreed on way too much in this conversation. So very quickly, Bitcoin, up or down?
Look,
It's currently 32,000. Over the next 6 months, would you be a buyer or seller?
I'd average in, Colin.
So you'd be a buyer.
Look, I'm a buyer of Bitcoin.
Right.
Look, LMAX Group, it's out there. We have X% of our balance sheet in crypto. We will have for the future. I treat it as I treat euros and sterling. I think certainly 3 years from now, it will be north of here. You might see, I wouldn't be surprised if it prints at 20,000 this year, which wouldn't be a horror show from closing the year 29,000.
I read you down as a one-armed economist.
You saw me I'm a research analyst, but look, no, if you held a gun to my head, I'm a buyer of Bitcoin particularly.
Okay. Right, in that case, I'll be a seller. So at least we can disagree on something and it's cool. David, thanks for your time.
An FX trader.
Exactly. Yeah. Thanks for your time. And I look forward to the next in our series.